I do think we sold way too early. We didn't really have a compelling reason to sell. We didn't need more money. I had a lot of inbound interest for from Series A and Series B founders. We had only raised under 3 million across our seed and Series A rounds. But we were profitable. We were growing at 30%, 35%, and so on. So the reason we sold was.
Hello and welcome to the Emerge Product Market Fit Academy series, where we're joined by leading operators and founders in edtech to share practical insights and advice for early stage founders. If you're building the future of learning and work, then this is for you. I'm Zara and I'm joined by our guest today. Smita is the co-founder of zyBooks, a learning platform for technical disciplines like computer science, engineering, and IT in higher education. zyBooks are currently adopted at over 1,000 colleges and universities and used by over 1 million students annually. Smita sold zyBooks to Wiley in 2019, where she was the SVP of Academic Learning, leading a $350 million business. She recently left Wiley and is currently advising edtech founders and ideating on her next startup. Smita, thanks so much for joining us today. I'm really looking forward to our session.
Thanks, Sarah. I'm excited as well and really happy to be here. In addition to being what you said I am, I'm also a venture partner at Emerge and very happy to do that.
We're lucky to have you. Let's jump in. Our conversation today is focused on strategy, and we have a lineup of 3 topics to discuss. Firstly, how should founders think about strategy at early stage? Secondly, how to judge when to double down on a strategy that works versus continuing rapid experimentation. And finally, we'll talk about how to think about acquisition in edtech and the big question, to raise or not to raise. Now, before we dive into these questions, Smita, I'd love for you to give a brief overview of your amazing journey as a founder. I'd love to hear about zyBooks, the journey, where the idea came from, how you built it, the acquisition, and where you are today, of course.
Yeah, thanks, Sarah. We started zyBooks in 2012, like 2013 was our launch. And the problem that we were solving was high failure rates, high dropout rates in computer science. My co-founder, specifically Frank Vahid, who's a professor at UC Riverside, he was very intimately familiar with students joining, second generation, very often first time college goers, and in the family, and they find programming hard. It's the first course. They find the second course hard, and they drop out. The dropout rates are very high. So the problem was clear to us. And because Frank had been teaching for many years, and we had been PhD students together at UC Irvine, we could quickly come together, ideate on developing an interactive learning experience, pilot it quickly with very little tech, bootstrapping, and then going from there to doing our first implementations, MVPs, raising money from the National Science Foundation. We got about 2 million in grant funding from the SBIR, raising a small round. And really, we just kept iterating, and we got our product market fit pretty early on. From there, we went to 2016, where we expanded our sales team dramatically from 6 to about 20 people because we got some funding. We could see the product market fit, and then sold to Wiley in 2019 when we were about 15 million in sales. And then it grew very rapidly within Wiley, especially once COVID hit. We got the COVID bump, being an online platform. And then we decided to expand into other disciplines, data science, IT. And today, zyBooks at Wiley is doing extremely well, still has high growth rates of 15 to 20% annually. The team is all there. And in fact, the team is now doubled. It's about 200 people. So it's been a real success story within the courseware space, which is a tough space to grow a business in.
Fantastic. What an amazing journey, Smita. And despite it being a tough space to grow that business in, for it to be doing so well. And I guess COVID was also a boost to that type of business. But amazing journey. I'm really excited to dig into behind the scenes, the strategies that led to that growth and how you thought about it. And let's just jump into the first topic on how to think about strategy at early stage. So as a founder, you're constantly putting out fires. You're managing what's right in front of you. You're trying to stay alive. And many founders are wondering how much strategy should you actually be doing at the early stage, how prescriptive it should be, and how closely you stick to it. Do you have any frameworks that you can share for how you thought about strategy in the early days of zyBooks?
Yeah, I would say strategy is key. It's key. I cannot emphasize this enough. It is what prevents the fires. It at least reduces the number of fires or the intensity of the fires. So I'll describe a framework, but I'll say that it's important for alignment within the team. The team may be small, you may just have a few people at the start, but you'll be surprised even early on. Sometimes there isn't clear alignment on who you're selling to, what exactly is being built, what exact problem is being solved. So strategy, I think, is key. And it also helps you figure out what to do and what not to do, like super key. So I would say I'll divide it into two parts. Early on, when you're ideating and not quite clear on the problem to solve, I think there's some key questions you should ask yourself. One is, what is the undeniable need? Not this is a nice to have, but this is what is the undeniable need. And ideally, you want a hair on fire kind of problem, but a problem that you see, you understand it. So that takes me to the second thing, like why you or why me? Why am I equipped to do this? Why me over others? And I'll keep giving examples from zyBooks if you don't mind. Computer science is not a big discipline. It's a fairly small discipline. If you compare it to chemistry or statistics, the enrollments are relatively smaller, but we understood it intimately. And we said, listen, we'll start with CS and then we'll expand into physics and chemistry and so on. Ironically, years later, we still have not, because CS grew so much as a discipline, and we just realized that we needed to do more and more within computer science, that we just stuck to our roots for a very long time. So that's the second question, is why me? And the third is, ask yourself if there's an inflection point or a trend or something that you can leverage as you are starting off that journey. In our case, there were two. One is CS enrollments were growing dramatically, whereas college enrollments were flat or even declining. Computer science enrollments grew 5%, 10%, 15% in some years, year over year. So we rode that wave. And HTML5 came out the year that we were launching zyBooks. So we could build once and run on any platform, any browser, and that was a big deal. So look for inflection points. So that's the pre part, right? This is before. Now you have your product market fit. So now, well, how do I think of strategy? It's really quite simple. One is delight your user, and second is get more users. And it's very simply put, but delight your users. And we would do this every year, every 6 months. We would sit down as a leadership team and say, okay, what do we need to do to delight our users? Sometimes it was a specific feature. Sometimes it was support. Sometimes it was looking at pricing. But we really took that. And so when you're early on, you really have to say, what do I need to do to delight the user? This is just not, oh yeah, the product is nice, but really delight them. Because when you delight them, they'll tell somebody else. They'll tell the next instructor in the zyBooks case, they'll tell another user. Students will go and tell instructors and say, hey, I was using this for that class. Why could you also use a zyBook in this class? And so on. So figure out how to delight your users. And then in terms of grow more users, it's really your go-to-market strategy. It's really key. And in the early days, I highly advocate that the founder himself or herself actually goes and sells, because you get that intuitive knowledge of how to sell. And then you start expanding sales out. There's decisions to be made on field sales versus inside sales, how much marketing to do versus sales. What do I do earlier on? Do I do sales first and then marketing? And that depends on your market. We did sales, we did inside sales first, then we added on field sales, and at much later point, we really invested in marketing. I haven't really given necessarily a framework, but I would say think of it broadly in those categories and then stick to whatever you decide to do and turn away things that don't hit. If someone comes from K-12 and you're selling higher ed, you say, not now. If someone comes from the corporate space, but you're selling higher ed, you say, okay, in the future, because get successful in what you're doing.
And how long should you stick with a strategy that you're still testing out whether it's working or not? You are gathering data before you say, okay, this strategy is not working, let's try something else.
I think the early days, the pivot is really important. You have to pivot. And I would say rapid. You want to iterate quickly. You want to try to have a lower tech solution if you can, or easier to build so that you can change. And that's super important. And sometimes the decisions are big. Are you doing B2B? Are you doing B2C? Those are fundamental decisions. But after you've made, so I think early on, and you may iterate for 6 months, for a year, it depends upon when, and when you get that product market fit, you have it. And then it's time to pause the deep experimentation and get to really exploiting your strategy and implementing your strategy. And I'll mention when we felt it, and it was within the first year of working on zyBooks. It was a computer science education conference we had gone to. It was the first time. And what we found was the booths next to us were quite empty, and our booth was full. And we had instructors, and I remember getting into huddling with the team and saying, look at all of these names instructors have given us. They said, if you build this, we'll use it. If you build this for Python, we'll use it. If you build it for data structures, we'll build it. And I felt, aha, we got it. Right? You have people coming to us, and we were a small company. We were not even a year old. We were not a known name.
That's one of your aha moments of this is what product market fit feels like.
I'll mention another aha moment was that summer. So that was in March, but that summer I had that list with me. And so we started calling instructors and said, oh, so we are building this for Java and it'll be ready by the fall. And then instructors said, oh, you know what? I think I'm not sure I'll use it now. I'm on sabbatical. Maybe I'll tell. And I realized, oh, okay, there's a gap between a user saying they're ready to use it and actually using it, especially in academia. I think you're building a business for the long haul. You don't do month over month sales. You're doing semester over semester analysis. You're doing year over year analysis because things don't move fast. And in our database, we would mark those opportunities or instructors as not as closed, but it was not yet won, because we said we will win them. If not this semester, next semester, we'll win them. Yeah.
And we haven't lost them from our radar.
That was another big aha moment, is okay, it's not going to happen like this, even though the intent is there. And I think within edtech, that's the case. I'm sure K-12 is similar as well, relatively slow moving. And so we have to, once we know that we have the product market fit, is you just keep, it's the long game.
How you convert that intent to actually action,
Yeah.
buying or using the product. You touched on earlier some of the big decisions that you need to make in the early days when it comes to strategy. And one of them is budget allocation. And so I wanted to ask how you think about the intersection of strategy and budget allocation, and what the key considerations are for founders who are deciding how much to spend on product versus sales versus marketing.
In the early days, it's probably going to be 100% product focused, or close to 100% product focused, and it should be. You're determining product market fit, you have to iterate, you don't really have very much to sell, or you may be doing customer interviews and so on, but really you're not really selling and marketing. So when the time comes when you've said, okay, now I do have a minimum viable product, I think some of the effort needs to shift to selling, but it should not be a huge amount of investment because your product still isn't quite there. And it depends upon your market, your industry, as to when you would realize that, okay, now I need to invest more. So I advocate is you shift from 100% product focused budget or product budget to maybe getting more junior sales associates in under the leadership of the founder or someone senior, under the leadership ideally of the founder, and you figure out what that sales process is. How best is it to give demos? Who best should give demos? What is the value proposition? How do you craft the story? How do you tell the story? That is the founder's story. It is what the passion they have. You can't translate it into it, you can't transmit it to someone else early on, because you got to repeat it enough. When you have that, then invest more and maybe get someone senior in. Then maybe it's 70% product, 30% sales. And of course, you have G&A and so on as well. And when that flywheel, when you can see the flywheel being built and you say, okay, it's time to scale, you can expand rapidly. And maybe that's a time to do another fundraise. Maybe you have sufficient funding to move from being very product heavy to being sales and marketing heavy. And the question on sales or marketing, it depends a lot on if you're B2C, like clearly it's going to be very marketing focused. If it's B2B, it's probably going to be very sales focused initially, less marketing. B2B2C is different as well. But I would ask $1 here and $1 here, what's going to give me more? And we experimented a lot with marketing. As an example, we did Facebook lookalike campaigns. We got someone who had B2C experience, thinking we could reach our instructors that way. And we realized, no, it really wasn't. We spent about 6 months. We allocated a budget for doing Google AdWords and so on, and experimented within that budget and said, okay, a dollar here is not the same as a dollar within sales. So we're just going to invest in getting more sales reps. Right? Much later, after we were in Wiley, I think we started to do marketing much more effectively. Then I would say when you're more mature, there are probably metrics in your industry. So, cost of sales is about 30%. When you reach that level of maturity, then you say, okay, I'm going to allocate about 30% of my total budget to sales and marketing, and kind of sticking within that.
So very focused on product at first, getting that right for a very
Yep.
specific ICP and staying super close to that customer. Then slowly maybe moving out to sales with some junior sales associates under the leadership of a founder. And once you've really nailed that story, that sales process, then investing more and getting someone senior in. And then paying close attention to, depending on the product you're building and whether it's B2B or B2C, figuring out what that balance of sales and marketing looks like as the product is actually developed. Super helpful. And then on that topic of this idea that every dollar you invest has an opportunity cost, and not just money, but also your time, the resources. If we zoom out and think more broadly about this topic from the lens of the explore exploit trade off, at what point should founders shift their focus from this broad experimentation, whether it's product experimentation, sales strategy experimentation, maybe even marketing strategies, to moving to doubling down on something that works? There are a few different frameworks for how to think about this. And one approach that I've seen founders use is this McKinsey's 3 Horizons framework. And so with this framework, you manage your business and growth using 3 horizons that represent, firstly, in the short term, building and maintaining your current core business. And then in the medium term, expansion and exploration into new opportunities. And then finally, in the long term, research and ideas for growth and new business opportunities. And McKinsey's view is that you spend 70% of your innovation efforts in that first short term, so that should be aimed at the core, 20% at adjacent step outs, and then 10% in this breakthrough innovation category, but all of this at the same time. So I wanted to ask, what do you think about this approach, and what kind of approach did you take on balancing this need to maintain your current core product while still exploring different
Yeah.
avenues for future growth?
Yeah. I was not familiar with the framework, but we use something probably almost identical at zyBooks. So your first question was, how much do you experiment and when do you double down? You have to experiment till you're confident of that product market fit and you can see, I can build that flywheel. In our case, we called it the land and expand strategy, which is you get into one university with one course, and then that instructor tells another instructor, so now you have 3 courses the next semester, then 5, and so on. And we would keep track of that every semester. We called it the sales engine, and we just provided the metrics, and they were all moving in the right direction. At that point, what was the value of, and I'm just going to mention one more point about customer feedback, is early on you're experimenting and you're getting a lot of customer feedback. And then you get to a point where you're again confident that you have the right product, but it's not for everyone. And so then you have to figure out how to incorporate customer feedback, when to listen and when not to listen. At that point, necessarily pivoting because a large customer wants to go in a certain direction may not be the right strategy. It's important then to say, okay, this is my point of view. This is our collective point of view. In our case, for instance, we would get asked for adaptivity. zyBooks is interactive, but it's not adaptive because it's locally adaptive. It's not globally adaptive. We don't give students different pathways to do based on their base of understanding of computer science. It's pretty much the same pathway, but we would get asked a lot for it. And we would say, no, that's not our point of view. And not everyone liked that. I'm deviating a little bit from your question, but in terms of customer feedback, the customer feedback is super important at all stages. But as you get further along, you develop a point of view, and then it's important to stick to that point of view, to that strategy, because it's working. If it's not working, then you need to get back to the drawing board and experiment and so on. So that was the first thing. Then you ask the question of how do you allocate amongst those 3 buckets. On the product side, We had both technology or platform and content. Content roadmap, we made sure we funded a 3 to 5 year roadmap, because the new products, they take 6 months to a year, sometimes 18 months to build. When we first did our first IT product, we had to build a new lab system that required considerable investment. So the investment, in some sense, was dictated by making sure that we knew what we were doing most immediately, and that consisted of maintaining and updating existing books in the catalog, existing features on the platform. Secondly, that medium term where we have releases scheduled for later this year or for next year, and those had to be funded. And then lastly, those that were coming out year 3 years from now, and those had to be funded. And I don't know exactly the budget allocation we used, but it was probably in the ratio that you were mentioning. So what we were doing on the content dictated quite a bit of what we did on the platform on the engineering side. But within engineering too, we had an allocation for what we referred to as tech debt, which is just technology debt, maintaining feature, and then doing innovation and just broad open exploration. So, right now, for instance, AI falls in that bucket. I'm no longer at the company, but when I left, that was the last kind of category. That was the foremost category that we were experimenting with, both user facing features that used AI as well as internal productivity features that we were working on that helped us be more productive, but using Gen AI. And again, we decided a ratio ahead of time. So we're going to spend 20 or 30% on tech debt and maintenance. We're going to spend 15% on looking at new feature development and sort of everything in between for more of the near term features and so on.
And a lot of these ratios, we hear broadly, obviously, all three are important: maintaining your current capabilities or product or service, being able to think about your roadmap in the next year or so, and then thinking about the roadmap beyond 3 years plus. But there's no necessarily hard and fast rule with a lot of the specific allocations within that and how to approach that. I'm wondering, what were some of the hardest decisions that you had to make when making those judgment calls? And you touched on one of them. At some point, you're incorporating a lot of customer feedback. And at some point, you gain your own intuition about what works, what doesn't work. And you have to say no. And perhaps for B2C customers, saying no to some individual feedback is a little bit easier than saying no to a really big customer if you're doing B2B sales. In your experience, what were some of those decisions that were really difficult, and what were the factors that you thought about? How did you approach them?
There were several tough decisions. One of our large customers, Penn State, they wanted to use our lab system to administer exams at Penn State. And we said, listen, it's not intended to be an exam system, because if you are using it to administer an exam, we have to worry about load. We have to make sure the system is up. It'll have 500 students pounding at it at the same time. It's a different flow. And we said, please don't. But they really wanted to, and they did. And things worked okay maybe once, but not the second time. And then they dropped us. But we stuck to our guns and saying we are not an exam system. Right? Much later, many years later, we built out an exam system, right? Building out an exam system. So it was tough walking away from a Penn State because they went somewhere else, and we were proud of having Penn State as a user. They're a very big CS program and so on. The hardest decision by far, and I think it's still something the team is probably thinking of, is whether to stick in computer science or to move to other disciplines. Because the fear of just staying in computer science was, it's a small discipline. What's going to happen year 5, year 6, year 7, right? Now, CS grew dramatically as a discipline, but we wanted should we take our precious resources and move them into launching a new discipline? So there were a lot of heated debates about that within the company. And we did try getting into math. It was not hugely successful, but eventually it became successful through one of our channels. But it was initially, for early on, we thought we could do zyBooks for math. Very difficult. We did invest a lot. It did not work out. But I think where we were good was we were good at cutting the experiments, or saying, okay, we failed at this, we're going to walk away from it, as opposed to persisting for a long time. We thought we would get into physics. We did a couple of one chapter, couple sections. We did a lot of customer research. We went out in the market, and then we realized it was going to be really tough. So our biggest challenge really was this fear of just staying narrow and going deep, or should we go broad? And I think there's a balance now where we've gone to 4 disciplines, not to 20, but still the deepest in one discipline, which is computer science. So resource allocation, that's the toughest decision. Yeah.
That's a great example. I'd love to know how you manage this kind of overarching decision that doesn't go away because it's not an immediate yes or no right now. It's a decision on product direction. Did you have a cadence for readdressing or addressing the topic and revisiting it, hearing the opinions of the senior leadership team? Because I presume it wasn't one discussion, case closed, it was something you regularly came back to. So how did you approach that?
Yeah. I really loved our strategy discussions and the cadence we put in place. It fell into that cadence, but we met as a leadership team twice a year. Before we met, we solicited and we had full representation, marketing, sales, both the co-founders, product, institutional sales. So we had full representation, support, and so on, the support team. And we, ahead of time, we said, okay, what is it that you need to get your work done that you'd like to highlight? What is it that the open questions that you want to discuss? And so we compiled all of that, and these questions always popped up. The content director would say, is it time to start looking at IT as a discipline, as an example? We did 3 days in a room. We whiteboarded, no laptops, no phones. And it was such a healthy discussion. Lots of whiteboarding, lots of big flip charts open. And at the end of it, before we left, we said, okay, here are the top 3 things we're doing. And we've decided not to do these things. And not everyone liked it. Not everyone liked that decision. But there was an attempt at disagree and commit. As an example, something that kept getting off the list is collaboration features within the platform. Students can't talk with each other. There's no pair programming and so on. And it would get on the list, it would get off the list. And not everyone liked that within the team because there were some who were strong advocates for that. But generally, the reason we picked something else is because we could see the clear need. We could see that we can build it and we can sell it the day we build it. And we could see how it would impact our revenue. We could see impact on students. Like they want more exercises to do, more problems. They want more labs. Instructors want more automation, more grading. You could see that. But I really love the process. And it's a process that, as I'm advising as well, I'm trying to take to other young companies.
How did you manage those conflicting opinions? Of course, there's always going to be people that agree with your top 3 priorities and people that don't. But at the end of the day, as you said, you do have to disagree and commit at some point. You have to have everyone aboard. How do you manage those differing opinions on the product direction within a leadership team?
It's not always easy. I really don't have any advice. And I'll be honest, my co-founder he's a computer science professor. He had strong opinions on what should be done or sometimes how something should be built. And he might bring it up years later as well and say, I don't really like how this feature has been built. Can we just scrap it and can we build it again? And we'd say, or the team would say, that look, there's so much data, there's so much use, there's so much data, it's successful. Yes, maybe it could be better, but it's successful, and we don't want to go and invest now in rebuilding that feature. I don't have a great solution except to make sure everyone in the team, the whole company knows what you're focusing on. We would have our top 3 priorities for the year and say, we're building this exam system, we're doing this, we're doing that, and we're not doing this, not doing that. So when sales came and said, could you do this? We said, nope, it doesn't fall within our top 3. We can't right now, and so on. But no, it's not always easy people are passionate. They're passionate about what they feel. They have strong conviction. And as a leader, you want to acknowledge that, but then really try to get to that. Listen, I don't agree with this, but I'm behind it, and I'm going to provide a united front to the rest of the company. Yeah.
I guess in a way, it's a good thing when you have that disagreement because it shows that people are passionate about what they're
Yeah.
doing. They're involved enough to have their opinions. So it's a good problem to have. But as you said,
Yeah.
it's not always easy to manage. But to get to that point of disagreeing and then committing is really important where everyone is on the same page. Moving on to our final topic, which is how you think about acquisition in edtech. And As I mentioned at the beginning, we'll come to the question of to raise or not to raise. But first, I'd love to hear a bit more about when you were building zyBooks, how did the topic of acquisition come up? How did you think about it? And what was your approach there?
We decided in 2018 to sell. And the to be honest, it's a question I think about very often because I do think we sold way too early. We didn't really have a compelling reason to sell. We didn't need more money. I had a lot of inbound interest for from Series A and Series B founders. We had only raised about under 3 million um, across our seed and Series A rounds. But we were profitable. We were growing at 30%, 35%, and so on. So the reason we sold was our investors said you should do something, either raise more. You said they could do status quo. We could continue growing at this. You have a base of 15 million. You can grow at 30%. You can keep adding to it, and so on. So that was one path. But they also felt we could either sell because the market was good, elections were coming the following year. There was some concern about what would happen with the market at that point. So the reasons to sell were there was no push from instructors, but I think my co-founder was keen to sell as well. And to be honest, I did not give it as deep thought as I should have. So now when I speak with founders, I ask them again, make sure you know your motivations as to why you're selling. Is it personal reasons? Is it that you feel there isn't sufficient growth left for you here and you need to go to a bigger player in order to leverage either sales force or to leverage their product or to leverage their brand in order to grow? So be clear on the motivation. So anyway, we decided to sell. We decided to engage with a banker, and we really liked that we had a small banker in San Francisco that we worked with, and then went through a process of getting competitive bids. And at the last, we were down to choosing between private equity buyer and Wiley. And we decided to go with Wiley because we thought that there was a good strategic fit, and we were a little bit concerned about where private equity might take us. So that was, and within Wiley, I would say it's one of the few stories, at least so far, of success. We kept the team together. I fought that a little bit and said, okay, we have to keep the sales team separate and the product team separate because the way they work and the speed with which they work is different from how other teams are working. So they're growing really well, let them be. So it's been very successful within Wiley. So coming back to your question of kind of my advice for or my thoughts on acquisition is as founders, just be clear. Why now? Are you certain? And what's the compelling reason? What are your options? And if all that kind of still points to an acquisition, I would say that it's really important to have developed relationships with possible strategics earlier on. It was something we realized is when our bankers came back and said, okay, here's the list of strategics. I was thinking, who within Pluralsight, or even that could be a fit within Google, who would ever, when you're in a competitive bidding process, they don't know you. If you haven't developed those relationships, it's going to be a pass, right? If you're really thinking of acquisition down the road and you can identify your strategics now, even early on, start developing those relationships because that because then that's a possibility that those strategics pan out. Otherwise, during it's very hard. And that would imply then there's probably more options within private equity if you haven't developed those relationships with strategics.
Really helpful advice because it's something that you maybe don't think about until you're ready to sell. But by that point, these relationships you could have built would have been extremely helpful. So that's fantastic advice. And then when you were deciding between bids, what kind of factors did you think about when you were deciding whether to go down the PE route or Wiley?
Yeah, the future. One was simply the value we were getting for the business, so what we were valued at, and they were comparable with private equity. We would have put back a certain percentage of our stake back into the company and kept growing that way. But within Wiley, we heard the Wiley family's commitment to education, the culture within Wiley, and we eventually chose that because we thought that was a good home. Not necessarily that the private equity was not a good home, but we just didn't know as much. And again, in retrospect, now that I know more, I think I would not have dismissed private equity as we did. I think we would have, considered it more. We did consider it seriously, but I think it was maybe a bit of a risk and fear factor that caused us to choose a home that we felt was more known and has been around for 250 years and loves zyBooks. And we knew that Wiley loved zyBooks and so on. So we knew that. Yeah. So
Another reason why those relationships are so important, just in terms of awareness, both on the side of potential buyers, but also from your side of understanding where potential future homes could be and understanding
yeah.
different players' motivations, strategies, how it fits with the future of your company as well. Very helpful. And then, as mentioned, the final question: how do you think about to raise or not to raise? How did
Yeah.
you decide? So you said you raised a small seed in Series A, and then beyond that, how did you take decisions whether to raise more capital or not?
Early on, if you can do your initial ideation without raising, because you can bootstrap it, do it that way, right? Because it's early, you're ideating, you're not exactly the why till you figure out that why. Once you figure out why this matters, why what I'm doing is going to matter, and you can start getting to very early product as far down as you can go without raising is my, and not slowing yourself down either, is my recommendation. I think also because it allows you to focus. And when you go to an emerge or you go to another VC, you have more data points. This is why I'm doing it. This is what I'm going to be doing. This is how I'm going to do it. These are my early proof points, right? And I already have this traction, etc. So as far, I really recommend just waiting. I think I've been here in the Bay Area for 30 years in California, and there's this. My friends from business school would say, "Oh, you're starting a company. How much have you raised?" And then he would say, "And who have you raised it from?" I remember going to some gatherings and not just how much, but who did you raise it from? And so you have this feeling that you have to raise that a metric of success is that you've raised a certain amount and you've raised it from the top VCs. But edtech is different. I really believe that edtech, it's the long game. And it takes a while to figure out that product market fit. Our customers are typically within academia, not within the professional space, but within academia, they can be slow moving. So you have to kind of, that doesn't necessarily fit the profile of very large VCs as well. And then you want to raise when you know why you're raising, and that if you don't raise, it's going to slow you down. So I have to build out sales. I know what to do. I have to build out product. I absolutely have to raise because now I'm leaving money on the table by not raising. And so where we were in 2018 was a question, should we raise? And again, maybe we should have raised as opposed to selling, because that would have given us kind of the growth that we got within Wiley as well. So it's make sure you know what you're going to do with the capital, and you can see it. It's not like hypothetical. You can see that if I add 5 people in sales here, and I add these 3 people here, and I build out marketing that I've never done before, it's going to give me this growth, and I'm ready for it. Or I need to pay my people more, or it's about time, right? I need to get 401k into the company. It's things like that.
Completely agree. If you're going to raise, know why you're raising and why it's super important that you raise right now. Where is that money going? Are you going to be too slow? What are you executing on? Let's move into the final part of our session today, which is our quick fire round. So I'm going to ask you a quick one-line question and would love for you to respond with a one-line response. Are you ready?
I'm ready.
Who is the one person in edtech that you admire most and why?
Linda Weinman from lynda.com, because of her immense passion, her creativity, how she bootstrapped the company, and kind of what she accomplished.
What's an emerging trend in edtech that excites you the most?
The impact that Gen AI could have on soft skills, especially in the medical profession, and for assessment and for training.
What's your top productivity hack?
Power naps in the afternoon, 10 minutes, refreshed, and then moving a lot during the day.
Love a good power nap and an extra walk, a walking meeting. What is the best book you've read on strategy?
Good to Great. And it was because of when I read it and the impact. It was probably the first business book I read. It was Good to Great.
And last question, do you have a favorite life motto, either personal or professional, that you come back to often?
I push myself outside my comfort zone a lot. And really, it's, I think, Nelson Mandela who said, no dream is too big and no challenge too big. And that's a motto for myself and the family, my kids, and so on.
I love that. Smita, thank you so much. This was an amazing session, and we've just got so much fantastic insight from you on strategy, resource allocation, and how to approach some of those really difficult decisions that you have to make at early stage. Thanks so much for sharing your journey with zyBooks and your approaches and frameworks. Really appreciate it, and I'm excited to share your wisdom with other founders.
Thanks, Sarah. I really enjoyed this. Thanks for the opportunity.
Thanks for listening to the Emerge Product Market Fit Academy. If you enjoyed this episode, please like it, follow our channel, and if you're feeling generous, share it with a friend.